Hello, guys. It's a good morning. Happy new month and happy new week. So, I just want to quickly run through last week trade recap. Yeah, it will be insightful. So, stick around. So, for last week, I took just 4 trades: 3 won trades, 1 lost trade, and 1 missed trade. And the missed one was actually on Friday. Yeah. So I majored on GBP USD and Euro USD. Yeah. So on Monday I had a win, 3R win. On Tuesday I equally had a win on Tuesday from GBP USD. Sorry about this. 4R. On Wednesday I took a loss on Euro USD, -1R. Then on Thursday I had another win on GBP USD, which was 4R. So bringing us to the total of 10R. When I started this vlogging, I told you guys that I just want to test out 3R, aiming for 3R trades to see if it is profitable in the long run. And from last week trading data, I can tell that it's actually profitable in the long run. Yeah, if you only have a good win rate, if you have a good win rate like 40%, you'll be able to make something out of the market. But without that, if your win rate is still below 20%, because if it's still below 20%, it will be very hard, because you'll be in the red. Yeah, you'll be in a loss at the end of the month. Because if you have to take 10 trades and your win rate is 20%, that means you're winning just 2 out of 10, and that will be 6. So 6 minus 8, that's -2. So you'll be losing 2% at the end of 10 trades you take. So it's not actually good. If your win rate is low, you should aim for a risk to reward that is around 4%, 5%. 4%, 5%. Yeah. So that's that. Let's go back to the main discussion for today. Right. This was what I was actually looking for. This high on the weekly. That was my primary aim for last week trading. Same on Euro USD. Okay, there it is. Same for Euro USD. So let's go to the daily. I want this video to be very short. Yeah, I don't want to make it too lengthy. The daily, we actually rode all the way up, starting from last Friday, which was on the 23rd of January. Started riding all the way up till we got to the targets on Tuesday. Yeah, we got to the targets on Tuesday, and we're able to capitalize on these moves, on Monday's move, on Tuesday move, but on GBP USD. On Wednesday I took a loss actually, because I would have been able to avoid that, but I just wasn't dialed in. Yeah, I just wasn't dialed in. So I took a loss on Wednesday. Then I got into a sink again and continued with the win. Thursday I got a win. Friday it was a missed trade. So let's go on and see what I actually saw on those days. For Monday and Tuesday, I won't talk about that because I already made a separate videos for those ones, so you can go check my previous videos and you'll gain something from there. So let's go with Wednesday, Thursday, and Friday, then call it a day. So for Wednesday, okay, on 28th, that's Wednesday. Yeah, right. For Wednesday, if you look closely, you see this imbalance here, this imbalance on the 2 hours time frame. Let's check GBP USD. Same thing here. The 2 hours time frame. Excuse me. So moving on to the 1 hour. And why I will favor a short over a long is because the overall target has been met. So price only reverse after taking out liquidity or rebalancing an imbalance. That's only when you expect price to reverse. All right, so let's go further. Okay, this is more beautiful. I don't even know why I actually went for a long on Wednesday. I don't really know. It's funny looking at it from hindsight. All right, let's go to the 15 minutes where things start making sense. Yeah. This is the accumulation session, or quadrants, like people call it. This is the manipulation from 1:30 to 3. Then from 3 to 4:30 is the distribution quadrant. Sorry, I have sore throat. So, what we'll aim to see during the manipulation quadrant is a run into one of two things: an imbalance or an old high or old low. So one of those two things should be met before we can try to trade either a long or a short. All right, so either it runs into an imbalance or an old low or old high, and this was what we did during the manipulation quadrants. We ran all the way to this one, our fair value gap. Yeah, run into this 1 hour fair value gap during the manipulation quadrants. And what did we had after that? A downward push to the downside, clearing out this low all the way to the downside. So checking GBP USD now. Same thing happens here, but this guy fell short of this high. Fell short of this high. Fell short of that high before reversing down. And that's an SMT actually. That's an SMT course. This actually took out the high. This is the particular high, 730, Asian session high. Took it out, but GBP couldn't do that. GBP couldn't do that. But after seeing a manipulation, what we look for next is a market structure shift on the 5 minute or on the 3 minutes. On the 5 or on the 3. On the 5 or on the 3. All right. Okay. Here it is. You can pause the video and tell me if you've seen the market structure shift and where you possibly want to enter from. Okay. Let's just go. This was the first one. That was the first one. And this was the subsequent one. Okay. So, if you are to enter from this candle here, you'll be holding a whole lot of risk. Just like holding a coal in your suit to burn you. Because you have to cover up the full though still yet we got 104 though, but that's too risky. So going with this second one, we got another break of structure here, then a retracement back into this other block here. This one. So you can either take a trade from this level or from this one. It's like a secondary entry. It gives you a second chance to enter the move. But ideally, you should take the trade from this area. Your stop loss at the high, the recent high, aim for 1/3. And that's it. So, pretty easy, right? That's it. So this is 1/3. And during the New York session, because it was New York session, I actually took the trade on Wednesday. I was trying to capitalize on this move, yeah, to the upside. Funny actually. That was an analysis I did in a rush. So I was trying to go all the way here because I was hoping that price will sweep this high before making any downward move on Wednesday during the New York session. So I was hoping to see something like this to the downside all the way to this area here. So I wanted to ride price all the way to this high, giving me a 1/4, then ride it back down to this area, some legendary move. But it didn't happen that way. I took a loss. Yeah, took a loss because this guy refused to go all the way up, just went into this imbalance and sold from there. Went into this imbalance and sold from there. So that was what I actually took that loss on Wednesday. So I'm being open with you all right now. That's why I took the loss on Wednesday. That was what I had in mind while doing the analysis. Just to ride it all the way to this buy side liquidity at this area, then ride it back down to this level, the overall target I had in mind. So that was everything for Wednesday. Moving forward, excuse me, to Thursday, go back to either the 4 hours or the daily. Though I use the 4 hours time frame a lot to frame my buyers. Okay. All right. This Thursday's price action. A whole lot of choppy action here, but I was still bearish though. I was still bearish on Thursday because I took a sell on Thursday and it was a win. I will attach all the screenshots at the end of the video. Alright, so I'm not seeing any like any higher time frame PDRA to frame a setup in the morning. Yeah, during the London session, no higher time frame PDRA. That's what I'm looking for. I'm not seeing anything. Alright, except for the fact that this side was taken out, but I don't usually like consider these ones as trade on liquidity. And the 1 hour, yeah. But where I took the trade was in the morning. Yeah, I took the trade in the morning. Okay, but the clearness of move was in the afternoon session, which was the New York session. All right. Okay. This was what I had in mind when I took this sell in the morning. So what I had in mind. We had let me just use the 15 minutes for this guy here. So it's 2, 12. Alright. If you notice something, I'm being consistent with the same approach on my analysis. I'm being consistent with the same approach. Alright, going further to the 3 minutes. Is it? Yeah. Alright. Okay. This was what we had. Accumulation here, a manipulation. I will always say, until you see a manipulation that read an old high or old low, you should do nothing. Until you see a manipulation that reads an old high or old low or trades into an imbalance, which is popularly called a fair value gap, you should not take a trade. You should not take a trade. If not, you experience unnecessary losses. So this was what happened from the 130 to 3. That's the manipulation quadrant. So we had this push to the upside, which cleared this buy side liquidity. Then what next after a manipulation? We look for a market structure shift. We had that here. A market structure shift. You can also consider this one. Sorry about the background noise. There's a church close to my house. You can also consider this one. Yeah. So after a market structure shifts, you just look to enter from the most reasonable area, covering the recent swing high or swing low. I know most people will consider this order block for an entry, but even if you are to consider this order block for an entry, your stop loss should also still cover this high. It should cover this high. It should. But with a little bit of patience, you could get a cleaner entry from this area here. I remember taking the trade from this point because I was actually at work. Yeah, I do go to work from Monday to Friday. So I was at work. So I missed the original move from this area. Covering this side all the way to the downside. To this area. That's 1:7. Like 1:7. But I won't have hold this trade all the way there. Yeah, just 1:3 and I'm out. Or 1:4 max, I'm out. So I missed that. Then I came back to this area, this order block here. That was where I framed the re-entry from. Because there was an SMT between GU and EU around these points, where G was doing a lower low there, E was actually doing a higher low. The video is getting long, so I'm trying to rush everything. Alright. Where G was doing a lower low, E was doing a higher low. And there's it here. So that was actually a clean entry. If you are actually like capitalized on that, you can take your entry from here or from the other block. Then all the way to the downside. Covering that high. That's 1:3 already. So that's clean, pretty clean. But I went with GU. I went with GU that day. And thanks to God, I got out without getting a punch on the face, because this guy came close to the stop loss but reverse after that. Then all the way to this low is 1/5, but I actually ended at 1/4, yeah, around this area. So 1/4 trade that day, yeah. So I closed the trade at 1/4, and that was it for Thursday. But the original move was from this candle here, 3:30 in the morning, New York session time. That's where the original move actually started from. After this manipulation, reading this buy side liquidity. So the original move started after the market structure shifts, a retracement, and it gave us another entry, which was this fair value gap here. So that was pretty clean. Then where I got in on the trade was around 4:21, because I was actually at work, so I couldn't monitor the morning session, what it was doing. So when I actually got on my screen, that was where I made price. Just had to make do with what I had. So sorry about that. So that was it. Took the trade from there, aimed for 1/4, and I was out clean. That was that for Thursday. And for Friday also had a clean price action, although it was a missed entry. Painful, but it is what it is. So this was Friday. Very clean, beautiful. Traded into this fair value gap on the 4 hours. Same thing on the 4 hours on Euro as well. So there is it. So it's a pretty clean day on Friday, but the guy just decided to miss our entry. Go to the 1 hour. If you had wanted to go for the London session trade, you would have gotten a clean entry, not gonna lie, because you traded into this fair value gap around 2. Same thing here, and there was an SMT there as well. This is a liquidity void, something I usually love to see. Yeah. So this was it. Let's go with the tradition. So you demarcate it. Although most times I don't actually demarcate this though, because I'm used to seeing it. But for you that is starting out new, you should demarcate it. Yeah, you should. And also for Euro, if you want to demarcate it, you can also do that there. Right, 4:30. Okay. So this was the accumulation session manipulation quadrants that actually ran all the way into this liquidity void, reading this high. Yeah. Traded this high. While trading into the liquidity void. After that is done, you know the culture now. Go look for a market structure shift on the 5 or on the 3 minutes. Okay. So this was a failure swing, but it's still valid, owing to the fact that I actually traded into a high time frame PDRA, so that's still valid. Then a fair value gap where you enter from, or the other block there. So this was pretty clean, like pretty clean. your stop loss above the high. Don't forget that. Don't forget that 103 is around this area here. Yeah, around that area there. That's a 103. So if you want to aim for this low, you'll be getting 104.4. So that's something huge if you have to leverage that on the 100k prop accounts or 100k life accounts, whatever you have. So that's pretty huge. Yeah. So although the whole range gave 107, the whole range from that point of entry to this point of reversal, it gave 107. So you can see that this strategy I'm actually offering to you guys for free is something if you take seriously, will change the game for you. Like, it will be a game changer for you if you take it seriously. It will be a game changer for you. So although I'm rushing through these videos so as to shorten it, but you can watch it over and over again, yeah, and try to duplicate it on your end, because that's how learning actually start to bear fruit. So let's go to the missed entry on Friday and we'll call it a day. On GBP USD, actually. Alright, same thing here. Demarcate its accumulation, manipulation quadrant, and distribution there. Let me take this one out. So we'll be left with just the New York session. Alright, that's clean. So this was what we had on this day. We got the manipulation in the first quadrant, and that happens. Alright, that actually happened. Well, it would have been nice if we had gotten it on the second quadrant. So we got the manipulation on the first quadrant. Then on the second quadrant, being the actual and ideal quadrant for manipulation, we just got a straight downward momentum. So after that, during the distribution quadrant, which was the third one, this was what I had in mind, this order block. That okay, I would love to see a retracement into this order block to enter from. I'll attach the screenshots at the end of this video. This was where I was actually looking for to take the trade from. 103. That's the ideal I was actually looking for, but I'm just like showing guys the possible move, the full range move. So it didn't come back to this area to give a re-entry. It just stopped from here and pushed downward. There was SMT between GBP and USD and Euro USD on this particular day. You can see it from here, straight down, while GBP USD was doing something else. So just clearing the highs, clearing the highs. So this was what GBP USD was doing. And don't forget, I don't usually forget my number one principle, market structure. So I was willing to capitalize on this minor shifts in structure there for the downside movements. So he just went above this guy and refused to tag me in before going downwards, and that was how I missed that trade. That's how I actually missed the trade. So that was everything for Wednesday to Friday. Same approach, same methodology, you know. So not as though I used something different on Wednesday, something different on Thursday, and something different on Friday. No, I didn't do that. I stuck to one approach. Yeah, stuck to one approach all through last week, and same thing this new week.